The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, except of course this Friday we'll be off. And of course, happy Thanksgiving to everyone. So we're looking at a Dow that's up 96 at 23,454. S&P is up 4, lagging quite a bit at 2582, and the comp index is up 7, also lagging at 6,790. This is going to be fascinating. The VIX is down at 10.8, 10 points. Is that a 6 or a, yeah, 10.60? Very interesting. So it's not in the 11s anymore. It's back down in the 10s. And we're looking at the E-mini right now, up 5.75 at 2582. The E-mini has to go above 2594.50. So that's another 12 points to break to a new all-time high. It's been making lower lows and lower highs over the period of the last 2 weeks. This is going to be very interesting because the technicals are still quite weak. Price is acting quite well today. The weekly chart has made a peak in the weekly chart from the 2 weeks ago because last week had a lower high, but still a high-level consolidation. 120-minute chart, let me just open this up so that you can see it much better, made its all-time high at 2594.50, just about on the 9th of November, and has been making lower lows and lower highs. Had a slide to the 2555.50 level on the 15th, had a strong rebound to 2589.50, then failed, and now is attempting to try to get back into that range. And really, the strong resistance is this whole candle right here from 8 o'clock on the 17th, that's Friday, where we saw a high of 2585.50 and a low of 2578.50. So we're getting into that candle, and that's going to be very important. The MACD did turn around. It's now slightly positive. The histogram, the MACD is the stochastic has a U-shaped turn, so it's only set at 64%. So this is going to be a very important phase. Let me go through a bunch of things because I have my webinar tonight. Finally, tonight's the night. Been really looking forward to it. Been preparing it for quite a while. Of course, I always like to do in my webinars, I talk about the socioeconomic aspects as well as stocks, and we look at things in great detail. What's really important in this particular phase, and the reason why this webinar called What Can We Anticipate for 2018, is I'm looking at, okay, let's just go through numbers right now, and then I'll do this as we move along. The Dow is under the all-time high of 23,602, made right there on, I forgot to put the date, it was the 7th of November. Let me just put that in there. 7th of November, 11/7. But we've spent time, 1, 2, 3, 4, 5, 6, 7, 8, 9. This is the 10th day. So it's over it's 2 weeks. Went down to 23,242. Big deal, 350 points. But it's been kind of stuck. Good candle today, a little sandwich from the green candle of Thursday to the red candle of Friday with a lower low, and today's candle with a higher low and not yet a higher high. So this is going to be very important because the stochastic did turn around. The on-balance volume is holding at a high level. MACD is still very, very weak. And as I said before, the weekly chart, both in the E-mini and in the Dow, is looking at a red candle on the week of that was the whole week of the 10th of November, and the week of the 17th had a lower high and lower low, and now we've just started off Monday. We'll see where we close, but I'm looking at this and I'm suggesting that it's getting harder and harder for the specific areas, certain areas within sectors in the market to really participate, and yet other areas are really taking over the slack. Because look, if you look at Home Depot, a huge move today in a brand new leg C in the daily leg, E in the weekly, and a leg G/B in the monthly chart, and that really speaks to the home building area. Look at the housing sector. I'm going to be talking about these things tonight in my webinar. What is going on, HGX? What is going on in the various sectors, and what am I looking at in terms of consolidation coming for some sectors, and perhaps a repatriation of stocks into certain sectors that were lagging, they could in fact become leaders for the next move up. Now, this is going to be very important, because if you look at the SPX, so if the Dow makes a new all-time high this week, that is really impressive action. If it fails to do that, it says, hey, sideways consolidation to down, just going on. So here we are, S&P up 3.3. That's really quite pathetic when the Dow is up 95. However, what we're really looking at is B making lower lows and lower highs. A push above 25.91 would be impressive. And then it would say, yes, maybe we could go to 25.97.03. That'll start a new all-time high. As it stands right now, the technicals are not that great in the daily chart. Weekly chart's pretty good, but it has been pulling back. Monthly charts in almost all the areas are still fantastic. So S&P above 25.91, very impressive. Below 25.76, just 6 points lower. I say, hey, be a little careful here. Let's go to the QQQ, because they were leading up. Now they kind of stuck down 2 cents, 153.93 in the PowerShares QQQ Trust Series. Excuse me. And it needs to go above 154.90. That'll be very impressive. I might have to call that a new leg D. But the MACD and stochastic are really quite weak, considering where it is. Monthly chart is still looking very good, and the technicals here are still good as they are in the monthly chart. So parameters to watch at 153.91, a close below 153 would be very negative action, and a push above 154.90 would say, hey, that is really impressive. Let's go on to the IWM. IWM was lagging a lot, then it was leading. Now it's back to leading again today, up 48 cents at 148.92. I'm calling this a single leg A up, and that monthly chart is still very strong. It's the weekly chart that I'm going to spend a little time on tonight talking about, because there are parameters that we need to monitor. The MACD is just about to turn positive after being very negative. Stochastic's good at 47%, not great, but good. So if the IWM Russell 2000 iShares is able to get to the 150 area by Wednesday or Thursday, that is really impressive action. If it stalls here at this trend line resistance, that's going to be something to take note of. Let's go on to gold. Gold at this particular point, whoa, down 18, now down 19 at 12.77. So I discussed this last week. I said, just purely on a technical basis, we went long the GDX, just a small position. I couldn't understand it because it was really the dollar that seemed to have the greatest strength. And here we are after a really strong leg, E to the upside, bam, it comes down. We took a 20 cents loss on the GDX, very small, and we're out. And that's all I can say is that it was confusing to me then. Now it's a little bit more understandable. The dollar is very interesting. Dollar's quite strong today, up 34 cents at 94.02. And what I said is we are long a good position in the UUP, which is the dollar trading vehicle. So I didn't understand why the gold actually acted like it did on Friday. I'll be coming back right after this, and we'll talk about crude oil and bonds, all of which I'll be talking about tonight in my very special webinar.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Basil Chapman has just announced a special subscriber event taking place Monday, November 20th from 5 till 6:30 p.m. Eastern Time. What can you anticipate for 2018? In this 90-minute webinar for subscribers to Basil's daily trading newsletter, The Opening Call, he will be discussing a variety of topics for the coming year, including, can high techs continue to lead? Will the financials be affected by yields, and where will yields be in 2018? The chances for inflation or deflation? What stocks could be affected or weakened in the coming year, as well as Basil's long-term outlook for the dollar and gold, as well as many other topics. For all the details and to sign up for a 30-day free trial to The Opening Call, visit the front page of TFNN.com today. With nothing to risk, this is a great time to try out Basil's daily trading newsletter. Sign up today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I was asked about platinum. I'm just going to go to that right now. Platinum is trading at the continuous contract. I might be a little behind. Is trading at 929.20. It hit on Friday 950s. This is really very negative action. And my concern here, both about PPLT, which was the question, and platinum continuous contract, is that it was doing well with the technicals moving quite nicely in the daily, but the weekly chart has been a big worry for me for a while now. I've often spoken about it, and I said, I'm a little concerned that the weekly technicals just haven't shown the sustained strength, and certainly the monthly hasn't. So be careful. At 929, it really has to hold the low that was made on the 14th of 923. A break under 923 suggests it's going to make an arch formation and come all the way back down to about the 910s. Most importantly, the weekly chart is the technicals just never really confirmed the big move up on Friday last week. So just be very careful. What you want to see if you are thinking of the long side, you want to see 935 to 938 within the next 2 days without hitting the 922 area. So just to be clear. So let me just go back to what we're looking at here in terms of, there we go. So the TLT, which is the Lehman 20-year T-bond fund, has been repelled from this resistance downtrend, short-term downtrend line for a little while now. And what's really important about it is this W that you can see in the weekly chart makes it quite clear that if the iShares 20-year Treasury bond ETF trading at 126.11 minus 28 cents, no big deal, the TLT is able at any point to break into the 127s and hold there really well for 2 sessions. My guess is that we could form a head and shoulders by going to 128.57 and stalling. But most importantly, the monthly chart, not the weekly chart, but the monthly chart would start to improve. And that would say to me, and I've discussed this quite a number of times over the last few weeks, that I believe that the TLT going higher with bonds coming down is going to be an issue for both the financials, number one, and for the general stock market as money starts to migrate from the equity area into the so-called safety of bonds. That's number one. Number two is, within the context of the markets, when I'm looking at the TLT and talking about the market, I have to factor in the VIX index, which is down at 10.59, having made yet another peak C, which might be a C minus. We'll see at 10.59. However, what's really important is that this is just the start of the week. And if at any point during the week at 10.59 right now, the VIX index happens to punch into the 1120s, 1130s, I'll try to talk about that tonight as well if I can, then I believe the weekly chart is going to start to see a technical improvement and suggest, it doesn't say how much the market could pull back, but it does suggest that there could be an upside cap on the market. I'm thinking that it's going to be an upside cap as the various sectors are rotating. And that's just, I mean, we'll see what happens. And I'll talk about that in detail tonight. Now let's go to, and crude oil had a stupendous move going to the end of last week. It's down a little bit now. It's down 53 cents at 56.18. However, there was a peak E in the week, in the daily chart on the 8th of November going to the 58.11 area. And at the same time, let me just refresh this because I know that there are some questions coming in. There could be an H pattern that says that if crude oil breaks under 54.80 in the next, I wouldn't even give it more than a week. I'd say 2 days, 3 days. Then crude oil has had its day in the sun for at least a little while, and that weekly chart peak D becomes a little bit more serious as the 54.37 area, the 9-period exponential moving average, becomes a key support. The MACD is still good in the weekly chart, and the stochastics at 91%. That is very good. So, what we're looking at is if crude oil at any point spikes about 57.60, there's a real good chance that it's going to break and at least test the high of the 8th at 58.11. But my guess is it'll actually take it out if it can do that. All right, cover that. Oh, high-grade copper. High-grade copper is just stuck in a range. It's kind of trying to rally a little bit here, but basically we've got to see if the 3.05 level, 3.02 to 3.05 becomes key support, is able to rally to the 3.15. I'm not sure it's going to be able to do that just yet. I think it's still chop sideways to slightly lower. Now, let's see. Okay, now my webinar tonight. So, we're going to be discussing everything from flying cars, just as in passing. I don't think we're going to flying cars, not for a long time. We're still going to get through the whole electric car thing. But if you're looking at what's happening in the auto industry, we're still long General Motors. And look at this. It's at 44.72 legs. See, something's going on. Maybe General Motors is saying that it's going to be taking some share of the electric vehicles from a Tesla. Tesla right now is down 9 and 305. I have a real problem with the Tesla on on a technical basis because it's making lower lows and lower highs, but more on a fundamental basis because I think it's getting very confusing. Is it now a car company or battery company? It keeps switching between the two, and they got fantastic plans, and he's done an amazing thing. To go as just an individual to come along and start a whole new industry is very, very impressive. Yep, dream company, but it is reality. And I'm looking at, I'm seeing the bigger, what is it, the X Tesla. I see a lot of, I don't know if it's the X, but it's the crossover looking one, the big one. I'm seeing tons of them all over the show here in Boston area. So we'll see what happens. But anyway, I'm going to be discussing the dollar, the longer term implications of the dollar. I'm looking at monthly charts now. I'm looking at gold, longer term. I want to talk about that for next year. I'm going to be talking inflation, deflation. I like to talk about the commoditization of yields that happened for a long time as yields went lower and lower. But there's a commoditization of just about everything, except what you really need, which is like health insurance, regular insurance, rent, whatever it is that people actually have to have. There are choices everywhere else, but not in the major big costs that you have every month or every year. So I want to talk about that because there's deflation. If you go to Amazon, you can get choices, but you don't even now have to go to Amazon. You can just search around. You can even go down to a local store and see a big sale on. So this is going to put a lot of pressure on the retail sector, but at the same time, it gives you a little bit of leeway. I'm going to be talking about junk, which is the Barclays Spider bond fund. And what is it telling us about the junk bonds? What is it telling us about what is the TNX, the 10-year yield, telling us about just not coming back to the highs that were made in the mid-24s recently, and here it is at 23.65. Are yields going to have a say? Is there an inflationary picture here? Is there a deflationary picture? I want to talk about that. That's really important to the investing aura, the Penelope. But no, it's looking at the smorgasbord of choices and what could happen. Very important webinar for me because it's looking at 2017 and trying to look at it as objectively as possible. I will be talking, yes, I will be talking about the marijuana stocks. I will be talking about Bitcoin, etc. It's all included. I'll be back straight after these messages.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
About FTNT and CYBR, and FTNT is Fortinet Inc., trading at 40.68, up 37 cents in leg D in the daily. didn't have a chance to do the weekly. I had it done before, but I'll just do it real quickly. Here we go. Yes, the monthly chart is at peak D. The weekly chart is at A, B, C, D, E, a rogue wave, E, F, that is F, pulls back, started a new. Yes, I like it a lot. It's a lot better at this point than I think than the cyber. So let me just do this. Yeah, I think it's close to a little bit of a pullback, very quick A to B to C to D, and the Chapman wave usually says, hey, there's a bit of a, not a top, but a bit of a pullback coming. But it's got, I mean, a 1.5 at 40.68. I don't think that's a big deal. Yeah, I think it's got a lot of support in the 39.50 area to 39. And the weekly chart is also suggesting that it's starting to build a new set of stronger boundaries in the technicals. I like it. I think it's very good. So that's that in the CYBR. Since you are a longer term investor, I like that one a lot. This one's going to be a lot choppier at 45.67. CyberArk Software is a security business as well. So this is one I would put in a rectangle formation and say that if it does go to the, it's at 45.67 or 58 cents. If it does go to the 47s, that only increases the strength of the weekly chart, which has really been building, and finally will go to 80% in the stochastic. The monthly chart is just really, it's an IPO. It's had a major move to the upside leg C, and then it comes tumbling down, doesn't take out the original IPO low. I like it. I think, oops, let me just put this softer. I like it. And I'm just saying that at this particular point, I think the other one, this one probably has greater potential looking out. But I would, if you've got it, I'd just say hold it. Watch it. If it breaks 43 support, it could take a little bit longer to form a base, but it's trying. So that's that. Next question I had was, yeah, the IYT. Sure, I'll look at the IYT, which is the transportation index, the iShares, and it's trading 171.17, up 14 cents. This has been a big disappointment, and what it's suggesting is that what moves goods and services in the economy, that's the whole transportation sector, is not acting as well as it should. It had a high back at 181 in October, mid-October. It's come down to 170. Just not a big deal. Yeah, it's 8-9%. But what is a big deal is that you've got a peak E in the monthly chart, and the technicals are very good, but starting to turn down. That makes this weekly chart of higher highs and higher lows really important, because if it takes out anywhere in the 168 area, that's 3 points lower. If it goes 3 points lower, I'm going to have to suggest that the transportation index is telling us that we are having some form of at least a mildish recession, or at least a slowdown. And that's going to be important. And if we talk about that, I'll be talking about this as well. This is CTAS. This is Cintas, overalls, uniform rentals, near the all-time high of 152.83 back in November. It's pulled back to the 144 area. Right now it's at 148. It's starting to struggle, and that's kind of a hint for me that this is a sector, the hotel business has been amazing. Marriott, all-time highs, even as we speak, an all-time high at 125.84. Leg E in the daily, leg D in the weekly, leg D in the monthly. Just a spectacular. This vertical move is telling us about an economy that is way stronger. People are spending money on hotels, and these are not cheap. Anyone's gone to a hotel recently, especially now that it's come the winter, they start to increase the rates in certain areas of the country. I'm looking at this and I'm saying, whoa, let's watch this closely, because if Marriott Inc., Marriott International A shares, hotels and resorts at 125 at any point in the next week or two starts to take out at 125, it starts to break the 122 area support, that's going to say, hey, watch this closely. But so far, this is really excellent action. Hyatt is H, 69.96, up 8 cents. Also close to all-time highs. Leg F in the weekly and the monthly. I think it's recycled. Yeah, AB could be a leg C in the G/C in the weekly, and the technicals are still strong. So yeah, this is holding very well. I was going to look at Hilton. I think that's HLT. Hilton. Yep, that's it. Hilton Worldwide Holdings leg E in the weekly chart. I don't know if this is recycled. I'm calling it a leg E in the daily, and I can't do this. I'll do it quickly. A, B, C. I believe this could be a D in the daily. So yeah, all-time highs. That's very impressive. This is just not wherever you go. I know from around here and a couple of places I've been to in different parts of the Northeast over the past couple of months. Wherever I've been, I'm seeing signs that don't just say register, wanted at the register or what. They are listing. They have like a 5 or 6 point request for employees. They are wanting people everywhere, not everywhere, but a lot of places that I go to have not just one little sign saying help wanted. They specified all the different departments. That's a good sign. So that's one of the reasons why I'm opening call. We're not. We have one small short position, and that is a general market position, and we have no shorts just yet. I'm getting real close to wanting to put in the shorts. I'm just trying my best. We got stopped out of the SMHs, a tiny loss, but they do add up. Not going to ignore that. But I believe that when the SMHs, the QQQs, the XL come, and I'll be talking about that tonight as well. The XLK, that is the S&P Select Tech Sector, starts to turn down sharply. It's at 63.55. XLK up 20 cents, but hasn't taken out the 64.02 high that it made. About 8, 9 sessions ago, and it's had all that time in which to do it. And the MACD and stochastic are very poor. I'm really close to thinking that this is a timeout. I'm not saying a major sell signal. I'm starting off to say I think there's a timeout coming in the lead sectors there. So the question I had was IBB. Yeah, sure. I'll look at the IBB, and the IBB trading at 308.18. That it's a sharp move down 3 points at 308. I'm thinking that from the technicals, it's attempting to form some kind of a base here, and this could be one of those counter trend things where you got your rotational correction, and out of the different sectors, you suddenly get one of the weakest sectors, which just got clobbered from the 340s down to the 302 area. This could have a nice bounce. And if you want to trade it as a bounce, you just got to have a very tight stop. I would have less than a 1% stop, because it's either going to work from this level or it's not. So just keep that in mind. The weekly chart is still very negative. In fact, the way I'm looking at this, I would even suggest that it has to work almost immediately. It almost has to be as if today was a low intraday, and it closes at about 309.70, and tomorrow has a 2-point pop to the upside. Otherwise, I don't think this will work. So that's the rotational aspect. If you're looking at, what was the question? The question was, I'll look at natural gas in a moment. So let me just finish off here. So this goes into the category of very oversold, could have a bounce. Is it worth trading the bounce or not trading the bounce? What was the question? UNG trading down 16 cents at 624. Yeah, it's had a tough time. And all I can say is that you've got to be a little careful. It must hold $6.10, otherwise it's going low. I'll be right back. Basil Chapman, this is out.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks, we're back now. I'm not sure if for today, it's unusual. I might be having a little trouble with my Basil Chapman at TFNN.com email. So I'm not getting some of the usual emails that I get. But I'll see if that's an issue. I just sent one to myself and it didn't arrive, so it's very unusual for that to happen. So the RTH, which is the Van Eck Vectors Retail Index, is pulling back. It made a peak D. It looked very weak, but the technicals, the MACD was still very strong. It looked very weak because it made a peak F and then dropped under the 9-period moving average. Yet the MACD was still strong and the stochastic was pulling back under 80%. Now you've had a big spike between Thursday and Friday of last week. Today it's pulling back and it's gone to a peak D. Now we're going to be watching this really closely because we're getting into the season. That's going to tell us, are some of these retailers going to really survive and do very well, or will some of them not? So this is something to watch very closely. I'm just trying to think of any other, the S&P XL. Oh, why am I forgetting that again? Wait, what's the other one? XLP Select is up 1 cent, having made a peak B. Now the weekly chart is not that good. Select Spider Consumer Staples trading at 54.77, up 1. Yeah, the technicals are pretty good. Let's see what happens there. It's stabilizing. XRT. That's it, XRT. Let's see what happened there. Whoa, big move up, leg B in the XRT. Finally, it's waking up. Oh, that's because of Gap. Had a fantastic session last week. All right, so this is good, 41.77. This is telling us, let's see what Amazon's doing. Amazon AMZN is down 3 at 11.26. Now, I had this email, remember it was Thursday or Friday, about Amazon, and I said, you know what, someone wanted to buy the calls, the 11.25 calls. And I said, you know what, why don't you wait a little bit? I just think that it's made a peak D. It's really struggling. Walmart's giving it a challenge. You've got the season coming up, but this might be a tough moment for it. So Walmart, I've got in a peak C. It could still go to a D in the daily and the weekly. So yeah, Walmart's giving Amazon a really big challenge, but it's not so much that, I mean, let's face it, Walmart can't really challenge Amazon when it's in so many areas. Amazon's in so many areas, but it could give it a scare, and it could make it lose its focus just for a little while. So we're looking at different sectors in the market that I'm kind of focusing on, and I'll try to do a little bit of that tonight, but I will be doing it for my subscribers to my opening call now. So if you're interested in subscribing to my opening call, or you're interested in my webinar tonight, go to the front page of TFNN, and you'll see that tonight there's a webinar that you can join. You can have a 1-month free subscription to my newsletter. Look at this. This is extremely detailed. This is the weekend. I don't know how many, 13, 14, 15 charts. A very detailed report. Here's the overview. I've stopped. I used to always do the overview. Now I only do it on certain occasions during the week. So it won't be every day during the week, but it'll be maybe once or twice. And most importantly, it shows these 5 quadrants. So on the left, you've got the Dow 120-minute chart. You've got the VIX 120-minute chart. Discuss those in detail. Give you parameters to look at. It's got Richard Arm's short-term trading index. I call it the Chapman wave trend gauge because I only use certain numbers, and those numbers usually give very good readings. And here's the bar chart of the Dow and the S&P daily chart. And then I go through the whole thing. Today I said, if I wrote it over the weekend, so it was before the Sunday night futures. I said if Sunday night futures are -5s or more rather than +3s or more coming into Monday's opening, if by 11:10 Eastern time, the Dow is AM Eastern time. The Dow is -40s, S&P's -6s, comp index -15s. That will likely increase over the day. But early strength that actually holds into noon Eastern time will suggest a rotational aspect unfolding. So every day I give you parameters to watch. I discussed my the different charts. I wonder if I've still got them here. There it is. Yep, there it is. This is the Dow daily. I discuss what's going on, and I show these particular patterns. This is the daily without the MACD and stochastic, as you see on the right, with Chapman wave notations, etc. So this is a very detailed report every single day. But if you don't have time, you can go to my newsletter, which is I'm not sure I can show it right now. So it's just my newsletter has all these different bullet points, and it has, let's see what it had today. It had, okay, here we go. Yeah, it had 15 bullet points. I always show the Dow diamonds. We happen to have some subscribers along from the 22,390 level in the Dow. Goes all the way up, and then we went short about 3 weeks ago, a small position, and those are positions we have. Otherwise, we have only long positions, and we're looking to get back into some we've had really good profits in. We took profits. Let's go to Mike in Ormond Beach. Hi, Mike. How are you?
Pretty good, Basil. Basil, I know you're bullish on the dollar, but I've been watching one gold stock. It's trading symbol AU. And this morning, it went all the way down to 953, and it looks like it rejected that price. And on my smaller time frame charts, like my 30-minute and 15-minute, and I mean, it looks like the stochastic is turning up pretty good, and the MACD is starting to go positive.
So let's do this. So we're looking at AU, which is Anglo Gold Ashanti. This is trading at $9.74, down 25 cents. So one of the things that I looked at, because before I went along the GDX the other day for that very brief period, I looked at all the stocks. I thought, why not just get a gold stock? I looked at them. Some have moved up and some have just not moved up at all. It's really selective. This is very interesting. So I looked at AU. I looked at AUY. What the heck is AUY again? Yamana Gold. I see Yamana did go to a D, and now it's pulling back from the D. But the weekly chart is just not that strong. And when I go to the weekly charts of so many of these gold stocks, yeah, the daily has to lead to help the weekly. But if you're looking at, say, I'm looking at AU right now at 974, makes a high of 10.08 or something. Let me just check out what it was. 10.06 on the 17th. That's on Friday. Pulls back now at the high of the day, but still down on the day. And I look at the weekly chart. I say to myself, something's not right. The MACD has climbed strongly. Stochastic's been making higher highs and higher lows, and yet the price is just stuck. So it either has to do it. So do you have a position?
No, I've got my eye on it. I saw that, it looks like there's a lot of support, like around, what is it, like
950s.
950, 960. And it bounced down below it and rejected it. And I see the technicals are starting to turn up a little bit on the smaller time frame chart.
I'm pleased you brought this up, and I'll tell you why. because I believe quite strongly that when you've got the majority of these gold stocks, especially the smaller ones, but really you have to be led by the GGs, by the big ones. GGs also down, it's not going anywhere. Gold, which is Rand Gold, has held beautifully that big sharp decline to the 90 level. It's at 93.46. So I want to see this building in a slow motion over a period of a week, that the gold stocks and the former leaders, and gold, or Rand Gold certainly is one of the leaders, having gone to 126 back in 2017, then slipped down to the 69 area, trading now at 100, no, trading at 93. I want to see these things start to fill gaps. I want to see them moving to the upside. And then I don't mind gold following. I would prefer that the gold stocks lead and the gold follows. That seems to be the best thing for gold stocks. I'm just, let me go back to the AU.
Okay.
You know what? I'm going to take. I'll take a moment. Yeah, I was going to take a little nibble here and actually tell you, but let me go through it in the break, and I'll be right back after the break.
Okay.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Everyone, don't forget Steve's show coming up straight after this. It's going to be a wonderful show. And, of course, you've got Dave White, Tom O'Brien, the works. So here we are. So we've got online, we've got Mike and Norman Beach, and we're looking at AU. So my decision over the period of the few minutes that I was really looking at it, just kind of deciphering what I would do. I think, Mike, you have a very good feeling. You've done this often enough that I'm not going to get in the way of what you're thinking, because if you're thinking that you would like to just start a position and have a fairly tight stop, I'm kind of with you on that, because the stocks sometimes are not doing what gold itself does. So that's just something that I was thinking. My only concern is that because of gaps, it could suddenly gap down all of a sudden. But if you're prepared to do that, having just a little bit is going to give you a wealth of information, because you'll be following it a lot closer with the zigging and zagging of the market. So that's what I'm going to suggest. Maybe in a day or two, we'll look at it again and make a better decision. But right now, I think a little starter position is not bad, but I wouldn't get too carried away.
All right, Basil, I'd just like to add something for your webinar tonight. I'm in the east coast of Florida near Daytona, and every available piece of land is being built on. There's so much commercial construction going on here. It's crazy.
Because I know here in Newton, I'm looking around, I just hardly see pieces of land at all. But yeah, thanks for that information. Thank you, Mike.
Auto dealerships are expanding. These big businesses are expanding, but every available piece of land that used to be like farm pasture and everything, it's just all being built on.
I know. I'm going to be talking about that. I'm also going to be talking about it during the week. So, hey, thank you so much for that information. Have a great day. Thank you for calling, Mike.
Sure. You too, Basil.
So, folks, let me just go through this again one more time. This is my webinar coming up tonight. It's going to go to Salvation Army dollars for those of you who are doing any of the subscriptions. Some opening call subscriber event. I'm going to be talking about can high-techs continue to lead? Will the financials be impacted? I didn't get to the XLF today, but I think they're just a tad weaker. And where will yields be in 2018? The chances for inflation or deflation, the dollar and gold's longer-term outlook, autos, real estate, socioeconomic, political nuances in the next phase. This is a Victorian-type era. I think we're going into worldwide stock market euphoric phase is possible. Possibility of a serious consolidation before that happens. Third party is increasing here, and stocks that could benefit or weaken. I'm talking about a whole bunch of things. Should be a really interesting webinar.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.